Hello and welcome to Fintech Insider Insights, live from JP Morgan's e-commerce and fintech forum here in London. I'm David Brear, CEO at 11FS. On today's episode, we're going to be trying something a little bit different, and it's going to require a little bit of audience participation from in the room, not from you guys at home. Are you guys up for that? A bit of audience participation? That was shit, guys. Come on. I don't want to get all panto, but I will come down there, all right? So are you up for a little bit of audience participation? Yeah. Well done. All right. Now I want you to imagine. So there's an eccentric multi-billionaire. You picturing it? Let's call him Evan Marks. I don't think we'll get sued for that. That'll be fine. Right? Wonderful. He has decided to build their own city from the ground up. We, as a group of payment experts, have been challenged with building a best-in-class payments ecosystem from nothing, completely white sheet of paper. We've been given unlimited funds, which is awesome, to do so, and challenged with traversing the planet to borrow, or as we call it, steal, the best-in-class use cases. The city will be built in a yet undecided location. Our research will help them actually decide where that is. I presume it's going to be Mars, given... no, it's Evan Mox, isn't it? The billionaire wants us to attract highly skilled tech workers to live there who can work remotely for big tech firms based in the US, the UK, and all across Europe and MENA. And to help our panel decide, we're also going to need you, our audience, to decide where we start and which global solutions we can apply to our ecosystem to make it a world beater. Does that sound good? All right, perfect. All right, to help us with this journey, we are joined by an expert panel. First up, we have a Fintech Insider debut for Adit Gadgil, who is the Global Head of Sales and E-commerce and Technology at JP Morgan Payments. How's it going?
Hey, David, great to be here.
Good.
JP Morgan Payments, one of the largest payment companies in the world.
I think people know who JP Morgan is. If you're listening to this podcast, you don't know who JP Morgan is, it's probably your first episode listening to this.
Perfect.
But what do you do in the payments team?
So I partner with large fintechs and tech companies helping solve payment solutions around the world.
Very, very good. Great to have you on. Next up, another debut. So David Messenger, who is the CEO of Global Business at PingPong Payments. How's it going, David?
Hey, David. Good. Great to be here.
Great name. Your parents were particularly creative as well.
I know. Very good name.
For anybody who doesn't know, tell us a little bit about PingPong Payments.
PingPong is a leading global business payments network. So we cover 60 jurisdictions, licenses. Our vision has always been about digitizing trade, whether that's e-commerce, general import-export, supporting enterprises, expanding internationally. We cover anything cross-border, anything business.
Fantastic. Very relevant to what we're going to be talking about, which is good. Well done, producers. And last but definitely not least, having been on the show a bunch of times before, Irina Chuchkina, who is the CMO over at Vault.io. How's it going?
It's great. Thank you for having me back again.
For anybody who doesn't know Vault, give us the pitch.
Yes, sure, of course. So Vault is a Series B fintech headquartered here in the UK. It started as an open banking payments venture, but then gradually it evolved into a lot of other things. The vision is to build real-time payments everywhere. I'm sure a lot of people in this room will agree with the vision. And we're gradually assembling the pieces towards that vision, looking at the A2A companies, or rails in many markets where they are prevalent. Currently, we're live in 33 markets, all of UK, Europe, but also Brazil and Australia, and looking to do more.
Very cool. Well, you might be a supplier to the fictitious city or planet we might be creating very shortly then. Let's see how that goes. All right, well, this is where the audience come into this a little bit. We would like you to tell us where you think we should start in this, because it's a little bit chicken and egg in this scenario. What is the most important area when building a payments ecosystem from scratch? The two options that we think are either regulation or technology. So let's have a bit of a show of hands. It's hard when there's two options because you just put your hands up, right? But who thinks technology? Okay. Are there a bunch of regulators in the room that are about to say regulation? Who thinks regulation? Okay. I mean, that was a strong vote for technology. You're all like, let's talk tech for a little while. Let's talk tech for a while. Let's start there. Okay. So if we were going to start this complete blank sheet of paper, we can start with any technology that you can cherry pick from all of around the world in terms of where we are. What are we starting with? I guess the most legacy technology in payments is money, right? Do we go with physical? Do we just load up the spaceship with physical money? Do we start with that? What do you reckon? Go on, Dave.
If you're going to play poker, you've got to take some cash.
That's right. Yeah, you need those chips to mean something, don't you?
Yeah, exactly. So no, I mean, I think my point of view is you want to build the best system, you start with an open book. So nothing's ruled out. There's no point banning it. I mean, it's interesting to see in the UK with COVID how a lot of places said, look, we're not going to do cash. People accepted that, that's fine. Other places do. My principle is, allow the customer to decide.
Mm. It's a weird one. My son is 13. He's just getting his grips with actually what money is. Doesn't like digital money. He likes physical cash.
Yeah.
In a weird way, counting it as well. He's got a slightly Scrooge McDuck vibe going on, I'm not going to lie. But what do you think, Irina? Where do you start? Is cash have a place in this world?
Absolutely. I'm in the same boat as you. My kids have just requested £4 and I don't have literally a single penny at home. So the concept that I want to bring, I agree, we do need to give people the choice, but the concept that I want to borrow from Latin America is Rappi's cash on delivery, but not cash on delivery when you pay for goods. It's an ATM that comes with a delivery agent to your home. They charge you 5% and you get cash. You don't need to step anywhere. Nice.
I feel like what's the cash on? What's your children delivering for this £4 at this stage? Like, I feel like that's maybe another conversation.
What are they doing? They're doing chores, of course. There's a little bit of that.
So at that point, we're taking digital payments and like mobile branches, basically. Like physical ATMs, physical POS.
I think ATM should be part of public infrastructure as opposed to actually the responsibility of the banks. So yeah, maybe our city, that's part of the regulatory chapter that we'll yet to discuss, but I think ATMs are the responsibility of the government.
Interesting. I feel like I'm in a lobbying group immediately, but let's... what do you think? What technology stands out? Cash as one of them, or something else that we start?
So I'm based in the US, just to put it out there. Cash...
Don't apologise.
Checks,
okay.
Checks still very relevant.
We're still friends,
More than 50% of the US population touches cash every single week. And I think, the fact that we're starting fresh, maybe there's an opportunity to do something different. Mm-hmm. We've seen that in the Scandies, for example, only 1% is still cash. But there's a lot of behavior that needs to change where, that is not the case. Technology, let's talk a little bit about that. So I think digital payments, of course, real-time payments and whatnot, we're still in a world where ACH dominates payments, particularly in the B2B space. And so, I feel like when we talk about innovation in banking, it's like me talking about going to the gym. There's definitely a lot of opportunity in that space.
You're from the US.
So I guess, cash was sort of semi-pro, it might be a good place to start, but what about, cards? We all carry cards. There's 14 billion of them out there.
One point on cash, just to close out. I think the thing about cash is it's anonymous. And that's the underlying thing. The thing about digital payments is they're not anonymous. Certain governments in particular love that. Other political systems don't. But I think this issue around data privacy and anonymity in cash and who has your data is actually an underlying theme here that we're going to have to navigate.
I guess both in positive senses, but also more nefarious ones as well,
exactly.
Right? So, fraud's a thing. Like, I'm sure you've covered it in the rest of the day at some point, but it's like, so I guess if we introduce anonymity with payments, we can introduce possible risk as well?
Yep, absolutely.
But I guess it's like having a private browser, potentially, right?
Yeah. Yes.
Can I just bring one more point on cash here? So Hurricane Maria, Puerto Rico, devastated for several weeks, electricity grid down, etc. Yeah. The entire economy went back to cash. There was no other way to trade. So I think one needs to think about availability 24/7, under crisis situations, etc. Otherwise, there needs to be some backup as well.
Cash adds resilience, and I think we need to give people choice in that little city.
You mentioned cards, though. And cards, I think... Cards to me is one of those business models that I still scratch my head on. It's become so embedded globally, particularly out of the US. But the underlying economics and interests don't really seem to line up. So if I was starting afresh, I would really say, let's take a fresh look at cards. I'm fine with cash. Cards, I think we can do better.
David, you want to tell us about your American Express experience?
Exactly. I know the inside.
I'm fine with anonymity in like briefcases of cash, but when it comes to interchange fees, then I don't like it. Is that what you're saying?
But there's a fundamental mismatch where you've got, the merchant is paying for it.
Yeah.
The fees are invisible to the consumer.
Sure.
They can be significant. Prices are higher because of it.
Yeah.
But actually what's happening is the consumer's getting rewarded by the card issuer for using that card, not for using that merchant.
Yeah.
And so there is an underlying economic tension there, which hasn't been resolved. And it's very much in the US, obviously Germany, other European countries, very, very different, different model. So I think, buy now, pay later, this type of more flexible approach where merchants are choosing where do they offer credit, rather than it being baked into the payments infrastructure, cards infrastructure, is a much more flexible, responsive model to what does the businesses need.
Yeah. I guess with cards comes, and we talked a little bit about, the different types of payment structures around mobile devices, and comes with POS, right, and all of the materials and all of the infrastructure that goes around that. Is the cards the tip of all of that spear at that point? Do you think, Irina?
I see cards as a form factor. It doesn't have to be a card. It can be. Well, I think ultimately everyone's using mobile phones, as you were just saying. So as long as we can put the account on file, really, within that mobile phone, and sometimes attach some credit line to it if we want to. Again, like the consumers can have the choice. I think that's what we should probably be moving towards. It's a token, really, ultimately. That token can brilliantly operate in the e-commerce space if we create, again, the infrastructure for that. But even offline, QR code-based payments, you don't really need to invest a lot into the hardware. Whether it's QR code-based systems in other parts of the world, sometimes it could be, alias systems. So I've seen a lot of the emerging markets absolutely thriving on digital economy with minimal cards. Different payments, really very different payment culture.
Yeah. Are we being a little bit timid here? These all feel a bit evolutionary to me. Are we going to take cattle and trade them when we get there as well? What's the... I thought it'd be like beaming a payment with my eye into the other person or something. Blank sheet of paper, guys. Let's go mad. What do we want to do?
So I think maybe just jump in here. So what we see is private payment networks. In the US, for example, we have Zelle. Right now, it's taken a while to get it up and running. We see billions of transactions. It works, but it's limited to the banks that are participating in it. Right? What we've then seen is we've seen public infrastructure come out. Central banks like India, Singapore, Brazil with PIX, et cetera. We've seen huge scale. We've seen inclusion because you now no longer need a bank account to do that. You can trade on wallets and so on. And so I think my vote would be, establish public infrastructure that allows for instant payments using some sort of metric that's consistent across all participants.
I have the suggestion, since you've now
dialed it up. Let's go crazy.
Encouraged us to go crazy. So digital identity is something that we were hoping to also discuss at some stage. The way digital identity as part of the public infrastructure has been introduced in countries like Singapore, for instance, which has 97% penetration of SingPass. Basically, it's still device focused, but ultimately, all you really have to be your identity is your body. So ultimately, we will be paying with our own, whether it's a face, a wink, a smile, and whatever it is, really. I think you come to a store and you just, leave.
We tried that out at one place. Have you guys tried that? We did it we had a Fintech Insider live in Helsinki, and we did it so that you could pay with your face at the bar. We're a little bit concerned, as the night went on, would it still... It did, which is good. So it sees through those things, which is helpful. I didn't know whether I should put a drunk face on to start with or just progressively get more drunk. But technology, it's a great thing. Yeah. But that's interesting. And it goes to your point on that, and you were sort of talking about the centralized structures for these things or standards for these things. Then actually your point around is the ATM infrastructure a centralized thing and a managed centralized thing rather than privatized thing. Do you think the same thing for the standards around them as well?
The standards around ATMs or the digital
standards around digital identity as well?
No, that's definitely the responsibility of the government from my perspective. And because it touches too many public services as well. This should be the point of access not just to the financial services, but ultimately to tax systems, all sorts of government services as well. So from that perspective, but also it comes with a set of rules, expectations, trust, resilience. Yeah. You can't just privatize it. Even if you put up a standard, the government has to own it.
Yeah,
I would agree with that. I think digital identity is a huge thing. It should be, it's going to change everything. And then for the consumer level, it's actually relatively easy. And I agree, it's government. There has to be government. Where it gets tough is business. How do you have that digital identity for business? And particularly, the economy is global. Most businesses are operating cross borders to some degree. And when you're doing that, how do you manage the challenges of digital identity? Every government's got a different standard.
Yeah.
Getting governments to work together, that is a slow process.
Yeah.
So I think what's on the domestic level, definitely it's government. I think on the international level, what's interesting is, are there mechanisms where actually the private economy can actually come together and define some standards that allow people to work? And this, if it's Mars or wherever, it's going to be cross-border.
Cross
Planet.
Interplanetary payments. That's
Yes.
Somebody buy that domain immediately. I mean, it's an interesting point that though, because actually you get to an interesting issue there around, because I mean, every time people try to put a centralized digital identity capability in the UK, people start sort of flipping cars and setting them on fire. It's not something that people feel comfortable with. But again, it's our bloody city. We'll make the rules, won't we? What do you think?
Yeah, can I just talk? I mean, I read somewhere in the US, there's, on average, about 150 different sets of credentials available online.
Yeah.
And, there's cybersecurity issues and all kinds of things. And so having kind of single digital ID allows you to, essentially do whatever you like instantly, right? KYC is shareable, et cetera. So there's so many benefits of having one digital ID. I mean, it seems the place to go.
Yeah. And I guess with that context then, I know there's, distributed ledger technology capabilities to share the answer but not share the information in that way. It kind of feels like, to your point earlier on, the way in which that information is private to you, but actually a credential in that state is probably really
credential.
important.
Yeah, exactly.
I love that. You're good for central identity, but you still want private cash. I love it. I'm good you knowing who I am, but just not all the time. That's fine. What else then? What other weird and wacky technologies can we pick from sci-fi movies we've always loved?
Oh, I think the thing that's not so much sci-fi movement, it's very much here and now, particularly in the last few months, is stablecoins. And this is, I think this is going to be real. I think this is actually going to become real very, very quickly now. I mean, the regulatory change in the US has just galvanized this sector. And it was interesting, we started out with everyone voting for technology. I think this is a case where it highlights that actually the key to innovation very often is regulatory, because the technology of stablecoins has been around for a while. There's nothing new there. What is new is all of a sudden you've got the US regulators saying we're going to legislate and put regulations in place that make this feasible and adoptable on a mainstream basis.
Yeah. So you're immediately saying our audience got it wrong at the beginning. Just
they could.
It's a bit awkward, isn't it? Yeah.
But I think the key is it's just another form at the end of the day. And the key thing is what we've learned with credit cards, we've learned it with checks, is you need a clearing system. Mm-hmm. And there are going to be many, many issuers of stablecoins. You could have the big marketplaces like Amazon, others. They could be their own issuer. You could have all sorts of people become their own issuer. The question is, who's going to accept it? And we saw it with Bank America card, the founding of Visa. The way to do that was to mutualize the network and have a single network for clearing. So I think stablecoins, are going to be really exciting near term, not just far in the future, but we got to solve that problem.
Can I flip the script here and actually ask you a question? What's the domestic use case for stablecoins? Internationally, I understand.
I think it's another form. I think there's a very compelling case when it comes to cross-border, and it is less dramatic when it comes to domestic. It's just another form. But if there is a shift towards to get rid of checks, to get rid of some of the older forms, and you've got a flexible, comprehensive system for covering stablecoins, then I think we can see checks disappear. We can see a move to more digital payments domestically.
It's interesting, isn't it? When we sort of touch on these points, often they're inhibited by the way things are today, aren't they? And many of the things that we talked about are present, but actually they're inhibited because we're taking evolutionary steps from where we are today, rather than actually taking a giant leap into solving many of the problems that we're highlighting. Right?
And incentives. At the end of the day, it's incentives. This is where I think some things regulations work for.
Yeah.
So the government setting the standard for a national individual ID makes sense. But you look at the US and you look at the adoption of real-time payments, FedNow, very, very slow. And you have to look at it and say, where are the incentives? If the banks are really making a huge amount of money out of the card networks and the interchange, then they're not incented to drive that. I think Europe took a different approach to open banking with PSD2. Didn't really work. It's when you're just trying to force something in without the incentive being there for banks to really engage in more than check the box of what's required. Nothing's really going to change.
Yeah.
And so it's fun looking at basic incentives. Who has the economic incentive? Are they aligned?
All right. I think lots and lots and lots in the technology side of things.
Yeah.
We're going to take a quick break and we'll be back with you right after that. Welcome back to Fintech Insider Insights. In the first half of the show, we discussed what kind of technology could help us build the payment ecosystem from scratch. Next, we're going to talk a little bit about regulation. So, guys, we touched on it a little bit, and you said things like PSD2, PSD3. Actually, blank sheet of paper. It's going to be a really boring sort of 6 months of our life writing all of these things out to get it to it. But it feels like that's a better place to start from. What do you think? What regulation would we take with us, and what would you like to see from scratch?
So I think the first place to start is, again, I'm going to use my US example, probably 30 different regulators for the financial services industry across insurance, fintech, banks, and so on and so forth. Incredibly complicated, different directions, not always going in the same way. And so the cost of compliance in the US is in the hundreds of billions of dollars, and it's entirely inefficient. If you look at Singapore, for example, again, we keep going back to Singapore, it's a great example. The MAS, single integrated regulator across all these industries, providing clear direction, and we've seen the success of that. So I think as a starting point, having a single authority is important.
100% agree. I've spent 8 years in Singapore. I'm a very big fan and an ambassador of the market. One thing besides that, and another example, actually not from Singapore, that I wanted to bring up is India. So the regulator, RBI, has also, about 15 years ago, established and founded NPCI, National Payments Corporation, something, which is basically a not-for-profit. And now the NPCI is literally driving, first of all, the standards, but also the innovation, really, in the whole market, setting actually high expectations and then exceeding them in terms of developing domestic schemes, replicating the best of the best from the Western world, applying a creative layer, productizing it. The whole success of UPI and everything that that NPCI has actually been creating so far is just an immensely fascinating example. They've just introduced account-to-account payments recurring kind of mechanism, which is quite mind-blowing, to be honest, and really hard to come up with. So from my perspective, having a single regulator plus also a possibly neutral body that is collective, that is not just consensus seeking, but also dynamic, because it's really important to make sure that the regulation is not static. As you said, every month, every 3 months, 12 months, there's a new technology that is coming up. So we have to be, the regulator has to be kind of on top of that game.
So I like I feel like I'm immediately thinking I want to apply for that job. It's like an all-powerful regulator who sets the standards and the technology capabilities. Even like with India as well, the demonetization of to riddle out the sort of issues that they were having from a fraud perspective. It's like that seems pretty all-powerful. I like that. Where do I apply, Irina? That sounds great. What else from a regulator then?
Single regulator definitely makes sense. The US is incredibly complicated and burdensome. A couple of things I would add. Interesting region to look at. People who are actually dealing with this right now is the Middle East. You look at what Saudi's doing, Qatar, most of the Middle Eastern countries, their central banks are looking around the world and they're saying, okay, what are the benchmarks? We want to set a next generational set of regulations and structure in place. What I've seen is Singapore is universally one of the examples they're looking at. They're also looking at Europe pretty much consistently as well. And so I think, and there's similarity between the two, because I think fundamentally one regulator makes sense. What also makes sense is a clear distinction between levels of regulatory oversight and scope of activities. So a sort of somewhat modular, tiered approach to regulations and licenses. So whether it's the micro and macro tiers in Saudi, whether it's the EMI, PI in Europe, and Singapore has various modules within the MPI license. So I think that sort of flexible approach within a single all-powerful regulator is certainly the smart way to go.
And I guess to Irina, to your point, they're not just the refs. They're not the gamekeepers. They're there to drive innovation forwards rather than just tell you off for things you didn't quite do that you should have.
Yes, for sure. And there's multiple sort of stakeholders in that game, really. So as a fintech, well, I'm part of a fintech. So what I expect from the regulator is, some amount of transparency, efficiency, and encouraging innovation, allowing me to do and come up with new products and solutions. On the other hand, consumers expect the regulator to protect their interests, to make sure that they're not exposed to too much risk or volatile, whatever hacky ways to even run payments, really. So, and potentially there's maybe other agendas and objectives that they get to deliver as well. Foreign direct investments, attracting talent, all of the other objectives. So from that perspective, progressive regulator, probably needs to. I think it's a really difficult job, actually. I'm not sure if
Yeah, you're putting me off it now, actually. Yeah. So, what actually? This is going to sound really stupid because I appreciate there's a definition of the word. What is the regulator actually there to do? Are they there? I mean, I know they're there to regulate. That makes sense, right? But what are they there to? Are they there to make sure everybody's playing fair? Are they there to create competition? Are they there to drive innovation?
I think there's a tiering. I think their primary objectives are pretty conservative. They are protecting consumers and protecting monetary sovereignty. Those are the fundamental things.
Yeah.
There's a certain amount of talk about having an objective around innovation.
Yeah.
And these other more progressive elements. But I think this is I don't know of any regulator that's gone this step. And I think if we were going blue sky, what do we want? We want a regulator where that's actually formalized. That's sort of progressive because things are changing. And the one thing we know is we shouldn't have a regulator that's designed around stability. Here is a stable platform of regulations. It needs to be architected to be refreshed and refreshed.
Yeah, it's an evolution, isn't it?
Yeah, and that's got to be built in. And also, I think the other thing, and obviously in our business we see this a lot, is central banks, regulators are focused domestically, not cross-border.
Yeah.
And yet we live in a cross-border world. And so it's having that built into the regulatory framework is what is the impact on cross-border and what does that mean for the domestic economy as well?
I also think there needs to be a certain consistency around how the industry is regulated. As a GSIP, we get one extreme, then there's regional banks, small banks, fintechs, etc., all potentially operating in the same space, offering the same services, very different approaches to how they're regulated. And I think having some standards is important.
Yeah, for sure. Yeah, it's an interesting one, that, and the consumer at the end of it understanding their levels of protection and everything that goes with those things as well, right?
Yeah.
It is an interesting one then. So we sort of flip from the technology side of things, but actually I think standardization of technology approaches, not just do APIs, guys, or as we talked about yesterday after that, do some AI. It's like actually the context around even getting involved in the building of that infrastructure. That's quite an interesting changing point because they say fraudsters are the most innovative people, but we're actually saying regulators are going to have to be the most innovative people.
Oh yeah, well, for sure. There's a lot of sort of self-education. I'm sure these guys are also still figuring it out. So maybe there's room for some sort of like labs or some sort of hackathons, really. But one thing I want to also acknowledge, and possibly just coming back to kind of the points of reference that we have been using, there are still quite a few things that I quite like about the European regulation. So whether it's PSD2 and PSD3 that I'm obviously involved as a company is part of that movement. I think Europe is setting some of the highest standards in terms of the sort of the ethical, the integrity of data, the ability for the consumers to actually manage their data and really be the owners of them. But also another thing that I really like in the European Union for specifically is the ability to passport your license and bring it to more markets. So how can we make regulation more transferable, interoperable? How can one license become your entry point in more markets? I think that could be a really interesting challenge we could solve.
Yeah, I think pre-Brexit, I was quite a big fan of it as well. But now I'm just very jealous of living in London. But yeah.
One topic you mentioned, AI. We didn't talk about it during the technology part, but this is a theme that's coming up a lot, which is as we think about the future with agents operating on behalf of humans, how do we enable payment systems, whether that's networks, card networks, or account-to-account transactions? How do we enable the protocol to allow agents to operate on our behalf?
Yeah.
It's a very interesting theme. Should be something we should lean into.
Yeah, we did quite well if you were playing the drinking game version of this and you expected us to say aye thousands times, then we did quite well, didn't we, on that one? But yeah, the regulatory requirements around that as well are quite an interesting point, because obviously where my interface and your interface and everybody's engagement is fundamentally different, and the job of the regulator is quite different, isn't it? Yeah. And I'd say globally we've got regulators taking different approaches to those things as well, in terms of black and white, do this, don't do this, versus intent. Where do you think we should sit in our fictitious city for, are we going black and white rule book, or are we going please do good things?
Or are we going
intensive consumers, good intention?
From my experience, I say black and white is risky, because this is rapidly evolving, rapidly changing. And again, I think the principles have got to be certain things we can be black about, certain things you can be white about.
Yeah.
There's a lot of value sometimes in being grey. And there are some economies like China, where you look back over the last 20 years, they have been so dynamic and innovative in the payment space. And that was enabled partly by the PBOC and the regulators in China taking that grey approach, saying let's create grey space and see what develops and then manage it as it develops.
Yeah, almost the lack of regulation in places sometimes allows innovation to happen a lot quicker, doesn't it? The old examples are always, areas of Africa where technology and regulation doesn't exist, so people make things really effectively, don't they?
Yeah.
So, what else do we want to take on the regulatory side of things? Anything else? Anybody taking that PSD3 PDF with them just for the light reading on the spaceship, or?
There are quite a few good things about PSD3. I think there is, coming back probably to the same technology things, we need to make sure that the private companies as well as the financial institutions have enough incentives. So it has to be somewhat standardized, market, but there has to be enough sort of liberalistic, what's the right word for that? But basically enough reasons for people to develop APIs, to invest into that infrastructure, to make money out of that. So as much as we're looking at, potentially like a fully super efficient system will have zero MDR, zero merchant discount rate. But does this really make sense? Does it create enough reasons for people to innovate, to create new products, to actually, come up with new ways, better ways, more frictionless ways? I think trying to reduce and over-standardize the friction away from the payments experience probably eliminates the kind of the playground for all of us, the fintechs as well as banks, actually, to come up with new ideas and new ways to service businesses as well as new ways to serve consumers.
Very good. Okay. So just to slightly summarize then, so we're going with a omnipotent regulator that is all-powerful, setting standards for technology and regulation that everybody adheres to, with digital money but big bags of cash if you need it, David, to essentially allow people to make payments within that closed-loop digital system with, fingers, face, whatever you want to do it with. What have we missed, anybody in the audience? Is there anything that you think you're missing, I need to pay with my glasses or something? Again, if you don't want the place where you work referencing your crazy idea, feel free to say you work from somebody else. Anything we've missed?
I think we missed crypto.
Crypto. We sort of danced around it a little bit with the stable coin bit, but it's shades of it rather than crypto.
What do you think crypto should be?
Should be?
Yeah, what do you?
Well, crypto, I'm not surprised you're saying that. I think crypto and cash are pretty much, two different sides of a similar concept, anonymized or somewhat.
To a degree, yeah, but slightly less centralized when you sort of start getting down to the sort of religious debate around it, don't you? What do you think, then? Is there something we missed?
I want to hear your views about the following proposition. In Switzerland, speeding tickets are linked to the income. How would it work on bars?
There's no cars.
Yeah. So the size of your fine is linked to your salary. Okay. That's where do you just not get your kids that are unemployed to drive all the cars at that point?
You do, but the value of the car is also slightly...
They take that in as well, do they? Fair enough.
Take that into account, yeah.
Okay, so you're saying the fees should be proportionate to the salaries in which you make from a payments eco perspective, or?
Well, kidding aside, I think that there are certain things that can be seen purely as as a fine that is absolutely fine for somebody who has a certain income level to park illegally, to speed illegally, So how do you control a system in which a disparity in income is so vast that you will disincentivize people to respect the law because it just means nothing, while you cannot really increase the fines because you leave the other people behind?
Yeah, it's an interesting one. Anybody got any ideas on that? I'm failing very quickly to try and put in place legislation that the Swiss government haven't thought about a lot harder than I have. Right?
They did it by referendum, so it's okay.
Yeah, weird fines, great chocolate. Like, who would have thought it? But what do you reckon?
I think actually, my initial reaction is I think in many ways regulators sort of unofficially do that today in terms of when you look at when there are fines issued, there is proportionality in terms of exposure being created by the misdeed,
or even the amount of regulatory capital you need to hold for different licensing and structuring, as you referenced earlier on, right?
Yeah.
Actually, there's a little bit of tiering, isn't there, as it stands at the moment?
So I think there is some tiering already there, and I think the other thing, again, from a financial institution point of view, obviously is reputation. The fact is, if you get a fine, it doesn't matter how big it is a big deal.
Yeah.
Because it is, as we say, it's always about trust. And when you have a fine, people don't really pay so much attention to the number.
Yeah.
It's the headline.
Yeah, I guess the other way to think about it as well is, I mean, it kind of has happened in the fintech space. There have been organizations that have tried very hard to stay as unregulated as they can, to stay outside of it, because while the Swiss policeman pulls you over in your car, if you're not playing within the banking rails, then actually, the regulator doesn't have any jurisdiction across you. So it does happen, albeit in weird and wonderful ways. Any other thoughts?
Yeah, we're talking about payments. We haven't spoken about payment messaging. Fun topic. ISO.
Let's get this party started, yeah.
ISO 20022 XML, right? It's taken a while to get there, but now majority of cross-border and domestic payment rails are using it. Creates a single standard of messaging. We've gone from a 1970s sort of approach with 20 fields of data around payments to the ability to enrich data with 900 fields or something like that, right? And so that has huge value in terms of compliance, in terms of customization. If there's going to be AI and machine learning on this data, there's a huge opportunity there. So I would say mandate ISO 20022 XML. And if you want to make it an API-enabled society, then there's an ability to do that. We've done that at JP Morgan. We've essentially replicated the ISO approach with JSON as well. So it's interoperable. And so there's ways to do these things.
Yeah, I mean, the context for all payments at that stage is far beyond what it was before. It's not just, your ledger is not just saying money going in, money going out. The whole context around people's financial lives is important at that point. I mean, it's interesting your point around, you were saying about AI and the interfaces and everything that goes with that. All of that context with hugely personalized experiences for those things. Arguably, we're all weird because we're sort of nerds on this stuff and we talk about it on stage and with friends who are interested in these things, I guess. But actually, like, for most people in this new city, this is like background to everything else, right? So do we think at the moment payments are very, you've got to have your wallet, you've got to have your cards, you've got to have your things. Does all of this and all of the regulation and all the infrastructure just make it much more seamless, much more of a background activity?
That should be the goal. And I think this, these messaging standard, long time to get there, but this is different from regulations. Incredibly hard to get regulators to agree on regulations, but messaging is so fundamental. Everyone's interest is aligned. It makes it seamless, makes payments go in the background where they should. And so I would agree. Everyone should be moving this path.
And as much as our city is going to be on a different planet, we want this city to not be an isolated little bubble. We want it to be connected to the rest of the world. So, well, I guess maybe the other planets as well. So from that perspective, making sure that we introduce whatever standards we introduce are compatible, interoperable. They get, they're compatible or possibly built on the ISO 20022 as well as other standards. So we want to build a collaborative environment, a collaborative ecosystem that would be, again, traveling well across borders, and well, not like not a construct that just exists in vacuum.
Very good. Well, let's finish colonizing Mars before we start trading with Venus. But apart from that, I think we're doing a good job. Like, if anybody's listening from, like, you know, Mars, like, I think the four of us has done a good job for this application. But we probably better wrap up and move on. So thank you so much to everybody. I mean, is there any change, do you think, for the people who were like, yeah, technology is the most important thing? Have you changed your tune? Maybe we do a vote. Like, who still thinks technology was the most important thing? Most of you still. Are you all technologists? Like, is that? But anybody who's like, no, I still think regulation is the most important part of it. Just that dude. Like, workout regulator, my friend. Just really is regulation. It's cool. We can talk about that at the bar afterwards. Awesome. All right. Thank you so much, everybody. To the guests, do you change your mind? Which one do you reckon? Technology or regulation? Tech, yeah.
Regulation.
Regulation. Okay. David?
I'm the same. If the regulation allows it, technology will develop.
Okay, so that's two. I mean, I'm going to go tech as well. So it's like, man, we're not committing 50-50. As all good stories start, they end at the same place, don't they? We're none the wiser. All right, thank you. And that does wrap up the discussion today. To end it, where can people find a little bit more about you and all the work that you do? Irina?
Connect with me on LinkedIn. That's where I live.
Very good. Adit?
Same here, very active on LinkedIn.
Very good. David?
Boring and predictable, the same place.
As for me, send me a text, Google me, find my phone number. Good luck with you. Thanks for listening, everybody. If you do like what you've heard, follow our podcast. Don't forget to leave a review. It helps us make it better and helps other people find the show as well. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email us if you really want to on podcasts@11fs.com. Thank you very much for listening, everybody. Goodbye.